What's going on, guys? Adam Snyder here with the Homemade Entrepreneur, and in today's video I want to talk to you about how to start a business and the common mistakes that you must avoid. Now, in 2017, 2016, there's been so many people trying to start businesses. Some are successful, some are failing time and time again. The reason why you will fail is because of some of these things I'm talking about right now. So if you've been following my channel, you know I am big in Amazon FBA. I sell a lot of stuff on Amazon. The reason why I want to point that out is because a lot of people that I talk to about Amazon FBA, they want to know every single detail, everything about that business. They want to know where to buy inventory, they want to know how to sell it, when they should, lower the price. They want to know all this different stuff. How to set up a business, an LLC, get their licensing, open up bank accounts, all that. That's great. But the problem is, you will never, and I repeat, never, know everything there is about any single business, let alone multiple businesses. So, one of the most common mistakes that I see so many people deal with is that they try to learn everything there is about that particular business that they never start. If you never get started, you're never going to make any money. You're never going to lose money, but you're never going to make any money. What's the point of having a business if you never get it off the ground? If you are too busy trying to learn. Learning's great and it's a very valuable tool, but the problem is, just because you know everything and you don't take any action, you're never going to get anywhere. So, don't make that mistake. Figure out enough that you can get started and start. Another common mistake that I see so many people making is they're getting an investor in the very beginning. Stage one, they're ready to go. Okay, they're all excited. That's wonderful. The problem is, if you are finding an investor, let's say you're not putting up any money and you're putting up your time, the problem that you're going to face is you have your investor who's putting up all the money, you have you who's putting up all the time. 50-50 partners. Now the problem is, that investor, they already did what you asked them to do. They put up the money. So now you, being that you're the wise person you are that gave away 50% of your company, you now have to do all the work, and that investor is going to sit back and reap the rewards. They're just going to get their money every month or quarterly, yearly, whatever, however you worked it out. That's a big problem. What you want to do is wait till you are a year, 2 years, 3 years down the line, maybe even further, and then get an investor to help you scale, because you don't want to give up 50% of your company. You want to give up maybe 5, 10, 15%, 20, maybe 25. You never want to give up, you never want to be 50-50 partners with somebody that really has nothing in the game other than their money. Because in the very beginning, that money, that initial money to start, that capital to get you going, it's so small. You are giving up 50% of your company for a very small portion. You don't want to do that. So, what I recommend is try to figure out a way to get the money. Don't get an investor. If you have to get a loan, fine, get a loan. But starting a business on a loan is a terrible idea. Many investors, many business owners will tell you that. I personally, I started my Amazon FBA business using my credit card. Now that wasn't a big deal. I could have paid off my credit card. It wasn't a big issue. But if I couldn't have paid it, what would I have done? I probably still would have used my credit card because I knew there was a lot of money to be made. So that kind of goes back to the very first thing. You need to learn, you need to know what your business is doing, how it's going to grow, how much money it's going to make, but at the same time, you got to start. You got to start, and don't give away your company. Whatever you do, never give away your company. So this kind of goes into my third thing, is not separating your business and personal banking accounts. I know so many people that, should I start a business? Should I open up a different bank account? Should I do this? Should I do that? Should I have a different credit card than my personal credit cards? Yes, you should. Now, the reason and the only reason why I recommend that you have, and there's a lot of other reasons, but the main reason why I recommend that you have separate accounts is to keep everything separate. If your business is booming and you're making a ton of money, your personal life is going to drain that account. Okay? I know that for a fact because I have done it. Okay, when I first started my online business, what I did, and even before my online business, is when I had an actual lawn care company, what I did is I put everything together. And what I realized very quickly is my personal life drained my business assets. I didn't realize it because there's a decent amount of money in the account, but it just kept pulling and pulling and pulling until there was almost nothing there. So don't make that mistake. Separate your business and personal accounts, because I guarantee you your personal life will drain that business account. Whether you see it or not, it will happen. So this next mistake I see happen so often is people don't know how to price their service, their product, whatever it is they are offering. Because in business, you have to sell something. Whether you're selling a service, you're selling advertising, which is going to be a service, you're selling a product, retail, whatever you're selling, you have to sell something. But how much do you charge for that product or service? How do you know? If you don't know what you are going to charge, chances are you're going to be wrong. So here's what I recommend, and here's a tip for you guys. What most people do is they have no clue what to charge, so they charge the bare minimum. They pretty much put themselves in as the cheap option, the affordable option. You don't want to do that. Now, you want to be competitive, but at the same time, you do not want to be so cheap that people look at you as having, no value. When you are expensive, look at, Porsche, look at, Lamborghini, Ferrari. Those are, Porsche probably not really, Lamborghini, Ferrari, McLaren, Bentley, companies like that, auto manufacturers. They are the high end, they are the exotics, the luxury cars. Why? Because they price themselves so high. People will do whatever they can to own one of those cars. Now you look at like a Honda, Audi, Toyota, something like that. People aren't dying to get into a Honda. You don't hear that. Why? Because those are valuable cars, but they're also the cheaper option. So what I highly recommend is that you figure out what you are selling, figure out how you should price yourself, and then make sure you price yourself a little bit higher, because I know, and I know this for a fact because I did the same thing when I first started. You do not always have to be the cheaper option. Sometimes you just need to be the better option. You need to provide more value than your competitors. Let's say you're in advertising and somebody's going to put up a 30-second ad on TV or on the radio. That's great. You're going to charge X amount of dollars. Well, if your competition is charging less than you, but providing less services, they're not as good, you can obviously ask for more. So you need to value yourself, you need to value your product, and you need to value your service. If you do, you can charge more. And the last thing is, and the reason I want to talk about this is because just recently I had to do this myself, but it is evaluating your business. Is your business taking off? Is your business, hit a plateau, or is it kind of declining? If you don't constantly evaluate your business, how do you know what it's doing? So what I had to do, because one of my businesses, one of my website, anyway, I'm not talking about the website, but it was a website business. So this particular business, it was a portfolio of 15 websites. So this particular business was not doing very well. So I wouldn't have known if it was doing well or not until I actually did an evaluation of it. And I was spending more money on it than it was making. So because of that, it was just in a decline. So what should I do? Not all businesses are going to be gold mines, and you need to know that. You need to know there will come a time where you have to just shut it down completely. That will happen. There will come a time where you don't shut it down. It hit a plateau. You need to put more time, more effort, more dollars into that business to get it up to where you want to be. I guarantee you, if you never evaluate your business, you're going to think it's going great. I know I did. I know a lot of other people do the same thing. They think their businesses are just flourishing. They're gold mines. They're bringing in so much money. But when they actually evaluate, when they dig into the details, the profit and loss statement, everything about the business, they realize very quickly we are losing money. So what you need to keep in mind is that there are so many reasons people make mistakes in business. If you want to start a business, great. Do it. Get started. But at the same time, don't just turn your back on your business, whether it's intentional or not. You need to be focused on what's going on in front of you. Because so many people are losing money. So many people are thinking they're living, the luxury life. They're going to be rich very soon. But the problem is they won't be. Because they are making every single mistake that I talked about in this video, plus more. So if you have ever started a business and you've made a mistake, or you've seen people make a mistake, put that in the comment section below. I'd be more than happy to read those, because I know a lot of mistakes I didn't mention here, but then there's also mistakes that maybe I've never even heard of people making. Okay, so put any mistake that you have made or somebody you know have made. Put that in the comment section below, because I'd love to hear about it. Also, if you like this video, smash that thumbs up button. Make sure you subscribe if you haven't done so already, and I'll see you guys on the next video.